So what we're trying to showcase here and how we engage with our companies and better understand their approach to AI implementation will then enable us to understand who will be those winners, who can change, who can adapt, and who can disrupt their own business model to really be an AI winner into the future.
Welcome to The Greener Way. I'm your host, Michelle Baltazar, Executive Director of Media at FS Sustainability. Artificial intelligence, or AI, is changing the way companies operate. But while much of the conversation has focused on innovation and productivity, investors are starting to pay closer attention now to the governance risks. In recent times, for example, the surge in energy and water demand from data centers in the US has become a growing concern for sustainability investors, particularly where it could affect emissions targets, resource use, and more importantly, social license to operate. For company boards in Australia, the question is no longer whether to use AI, but how to manage it responsibly. Joining me today is Sue Lyn Stubbs, Associate Director in Sustainable Investing at Fidelity International and author of the recent paper, Governing in the Age of AI, How ASX Boards Are Navigating a Fast-Moving Frontier. I've had a chance to read this paper before this episode interview, so we're going to include the link in our show notes, but this is quite insightful and it really gives us a sense of what ASX companies are doing. So, Sue Lyn, thank you for your time. Welcome to The Greener Way.
Thank you so much. Happy to be here.
So let's start with the paper that you've authored. So as the title suggests, it's Governing in the Age of AI. But tell us why you've decided to do this research and just the numbers of who participated.
No, fantastic. I guess what we're really focused on is during the AGM season last year, we thought it would be a great opportunity to start to understand how boards are thinking about AI implementation and the strategic value creation that it can prove and what are the opportunities and risks for AI. And so as an active manager, we're very lucky that we get to speak to so many management teams and boards. And so we really took the opportunity to start to ask boards about how they're thinking about implementing AI. So during the AGM season, we spoke to 31 ASX-listed companies, spanning multiple sectors and sizes from small cap to large cap to really understand how they're grappling with this issue because it's such an emerging and accelerating piece of technology that permeates, business models and implementation. So we spoke to financials, we spoke to healthcare, we spoke to technology and real estate. I think a lot of people have been focused on, the hyperscalers and software and hardware, but we wanted to have a broader view. We wanted to look across the economy and think about how different types of sectors are implementing AI and looking at it both from an opportunity and risk perspective. So it was a great opportunity to speak to boards and kind of set a baseline of how they're thinking about AI. We understand it was early days, right? This was 2025. Some of the models were emerging. So boards were kind of at an early journey. And so we wanted to understand how they're thinking about it. And the idea is really to test their approach through time. How are they improving? How are they grappling with these AI risks and opportunities? So we were able to ask them kind of 5 key areas across AI and how they're thinking about it across their business and working with their management teams. And then really try to identify where there were some red flags and key risks that we were seeing across kind of trends across the ASX, but then also looking at opportunities where some of the leaders were really, taking this challenge on and trying to really pursue a constructive and effective way of implementing AI. So it was a great opportunity to use our active management approach, our access to companies, and to do a deeper dive on how companies are looking at this very critical and accelerating technology.
Now, I know that you've looking at the white paper right now in front of me. You've looked at awareness and foundation. You've looked at how they operationalize and govern and the enterprise-wide adoption. So it's fantastic to hear that they participated in this survey or research, if you like. So tell us the key findings, and did you have a benchmark? Because this is like I said, it's early days and people really don't know what are we comparing with, what are the risks. So tell us more about that.
Yeah. 100%. And I think it is a challenge. How do you look at a company and understand where they sit on this spectrum that's emerging and evolving so quickly through time? And so what we did is we asked companies kind of 5 key questions and AI domains that we were focused on. So the first one was really around strategy and value creation. The next one was around board oversight and skills. The other one was around risks and controls, and then governance and ethical AI. And then finally, we were focused on the workforce impact and what it could do to the demographic of an organization. And what we kind of lent on was Microsoft's 5 stages of AI-powered transformation. And so they have a benchmark of assessing AI maturity. So we adopted that and tried to rank our companies, our investee companies, of where they might sit on that maturity spectrum. We actually had to add an additional stage 0, because there are some companies that are too early, right? They're not adopting AI yet. It may not make sense so much for their sector or their business model. And I think that will change through time. Obviously, in 6 months, 12 months, many of our companies will now be more at stage 1, stage 2. But at the moment, when we spoke to some boards, they were very focused on other operational considerations. So when you look at our benchmark, a lot of the companies do sit kind of at that stage 0, stage 1, and stage 2, where they're seeking active pilots, they're skill building on AI. We do have some leaders as well. Some of them are really thinking about transformational AI use, revenue generation, how it can really impact their customers. So we definitely have some leaders in there. But it is interesting to see that we do have many companies still kind of more conservative at that earlier stage of implementation. And I think that reflects kind of the culture of AI in Australia. We did look at some research around kind of risk appetite and trust with AI. And definitely Australia ranks a little bit lower than some other markets, and definitely emerging markets, for example. So it does reflect kind of the board outlook on AI and kind of this ability and trust and kind of acceptance and how comfortable you are with AI. But I think quickly we'll see that maturity spectrum shift, and we'll start to see companies moving much more to that operationalizing and scaling AI as well.
Wow. So to recap, that's funny. You had to include a category, which is we haven't done anything yet. Stage
Yes.
0, too early.
Correct.
And again, what was there anything surprising though? Were there any findings that were surprising to you?
Yes, most definitely. And I think what we kind of identified in terms of red flags, where we were really focused on this lagging, where, a lot of boards and CEOs were talking about AI implementation. But then when you kind of uncover it and dig deeper, you find that governance is falling short. So a few areas that we identified was one around the CEO and board disconnect on their narrative of AI implementation. So some CEOs were very bullish. They were talking about 100 plus use cases. We have a 300-page deck of AI opportunities. But then when you speak to the board and you speak to the chair, far more conservative, kind of more focused on cost efficiencies, productivity, less on some of these value creation and other opportunities that the CEO was outlining. So it kind of led us to focus on the fact that maybe there's a lack of strategic prioritization. And then also it raises the kind of the red flag of, where is that investment taking place? Is it going to the right spots in the business? And so that's what we were focused from is that raising a red flag of an immature approach to AI implementation? So that was kind of one key AI risk that we identified. The other one was around no-go areas. And unfortunately, we were hoping for a bit more articulation and a bit more conversation from boards on this. We understand that AI impacts are emerging. It's evolving, right? It is early days, but there are already key high-risk areas that have been identified in AI implementation. So, for example, workforce surveillance or biased customer treatment. And so in our mind, we were hoping that more boards would be able to articulate where they've already implemented guardrails for the use of AI across the organization. They're very across where it's being used, and then they've already identified maybe some areas where it shouldn't be used or should have more monitoring and oversight. And so, unfortunately, that was an area that was quite underdeveloped. And I think it's an area that boards really need to be focused on going forward over the next 12 to 24 months as the use of AI accelerates and it's embedded across an organization. So that's a key area we'll be focused on from an engagement point of view with our companies, and really trying to ensure that this piece of mitigation and oversight it does improve. I think the other key area we were focused on is the workforce impact. And overall, most boards were quite conservative as well on that front. Most were suggesting that there would be minimal impact over the next 12 to 24 months across their workforce. It really wouldn't reshape the workforce across different skill sets or different roles. I do think this may be a bit conservative, and I think, we are starting to see early signs of different pockets of the economy being impacted by AI, particularly younger generations. I think this does reflect what was happening in the press during the time we were asking these questions. You'll remember CBA had some headlines around the 45 AI-related redundancies at that time, and they
Yes.
did get pushback from some of their financial kind of trade unions. So we are conscious that maybe some boards were, aware and attuned to being sensitive around talking about workforce, talking about cost considerations. So I think that's one to watch as well as how do we manage, like what you said, that social license to operate and that human capital management piece. I think that's a key area to watch going forward.
Yes, I remember last year there was an intense period of within 6 months. A lot of companies were talking about AI linked redundancies, not just here in
Yes.
Australia, but also in the US. So it's interesting that timing and the mood at the time can
Mm,
also impact the responses. I
yes.
want to come back to workforce and talent management later. But we've talked about the red flags. Let's briefly talk about the bright spot. So, what is best practice currently?
Yes, and many of our leaders that we identified at that transformational and really using AI really showcased and characterized a lot of these bright spots that we identified. And I think there'll be so many more as we go forward and we learn more from boards and talking to our investee companies. But I think the first one was really around talent acquisition. A lot of the leaders showcased how they were already implementing AI. Some was just a single hire, upskilling from that perspective, while some other companies talked about 20 people, new teams, and kind of a centralized AI implementation group across their organization. So you are seeing different strategies across companies and how they're implementing AI. But I'd say the general consensus is that companies that were acquiring the skills and really trying to hone in on that capacity building piece did help with that being able to be more of a leader and implement AI, which makes a lot of sense. Also, where you showed kind of budgeting and workforce training, that was another key area of where they were leading on AI implementation. The other really interesting one was incentivization as well. I didn't think we'd see this so quickly. I was actually a little bit surprised by this, but already some companies are including AI into their short-term incentive plans. Some of them were a bit loose, so like we're encouraging our employees to use it, and it's sort of a looser KPI, whereas some were very quantitative and very focused on AI implementation and cost savings as well. So that was actually quite a surprise to me. And so I think going forward, we'll see how that plays out. We'll see if it incentivizes the right outcomes from an AI implementation point of view. But I think it's a little too early to say. But I definitely think it's an interesting development across some of our leaders. And then the final one, which we saw, was some of the leading tech companies were also engaging on regulatory development, whether it was from policy and guidance. So again, leaning in and trying to help support governments on how they should think about AI, how they should maybe pursue risk mitigation, et cetera. So that was kind of another interesting aspect that we saw. I'd say overall, though, it was the companies and boards that had a real culture of leaning in, not creating a fear mongering and kind of a sort of precautionary atmosphere and attitude towards AI. And those were the companies that were really leading and being able to implement AI much faster. And that was very much a key trend we saw across the companies that we surveyed.
My goodness. I'm really enjoying this conversation because there's a lot here that you're able to extract from that survey. But the takeaway for me is that you can't be too hot nor too cold. So some
Mm.
companies are too conservative, some are a little bit loose or not as clearly defined in their AI framework. Now I'm going to quote you back to
Uh-huh.
yourself, but you said in the paper that you believe the way companies manage their AI risks or govern their AI issues will be a clear differentiator for the company in terms of long-term value creation. So, in plain speak, as a fund manager and having done this paper, can you already feel or really see that those companies that are much better at covering all the five domains that you've mentioned will see, again in plain speak, their share price reflect that or be higher ranked than others in their sector?
Yeah, I think that's exactly what we've been discussing with the investment team is how do we take this governance maturity spectrum and then parlay it to the investment thesis. And speaking to our investment team, but particularly one of our co-portfolio managers, Sam Heathersay, what we've been discussing is the fact that, AI is similar to other tech revolutions. And what you can look backwards and you can look at which companies were disrupted. You can look at which companies were able to change their business models and really adapt to new technology and be more, successful. And a good example is Kodak and Fujifilm, for example. And what that showcases is, some companies are really able to take on the technology and adapt their business model. So what we've seen here is that these AI governance and understanding how to implement and drive that strategic value creation from a board perspective showcases which companies will be able to be adapt and not be disrupted. So what we're trying to showcase here and how we engage with our companies and better understand their approach to AI implementation will then enable us to understand who will be those winners, who can change, who can adapt, and who can disrupt their own business model to really be an AI winner into the future. And so this is a baseline, right? We are early days. This is an emerging kind of risk and opportunity that we're evaluating. But in our mind, as we go forward and we're able to test our boards more and engage with them and really understand how they're implementing AI, this will help us to understand who can be that disruptor, who can be that adapter, who can be most adaptable to AI and implementing and changing their business model. So what we're trying to really focus on is the fact that it's not just a technology issue, it's really an investment issue. And governance of AI and how the board is thinking about this will really help to shape the investment decision making and who those companies can be that are most successful. So that's what we've really been focused on from incorporating this into our investment decision making process.
Excellent. And finally, you have cited several emerging risks in this paper, but I just want to focus on one, and that is when you said human in the loop is insufficient. Explain what human in loop mechanism mean and why isn't it enough?
That's a great question. And I think it's something that we're grappling with it too. And we're still learning what this means from a risk mitigation point of view. But when we spoke to many of our boards, and you'll read this across AI risk mitigation and AI kind of oversight, many companies talk about implementing human in the loop. And that means where they have some subject matter expert or some sort of human that helps the decision support overlay, and there's some sort of human intervention in that process. So we're not solely relying on AI to execute that customer decision or customer communication, right? You always have a human in that interaction somewhere. And they're meant to provide that oversight. They're meant to check AI for any errors or, mistakes, right? And so many companies say that, yes, we use AI, yes, we're embedding it and we're overlaying it, but we always have a human somewhere in the process. And while I think that is the right approach at the moment, our concern, and we heard this actually from boards and management teams, that humans can get complacent, right? We can trust too much the AI model. It is very good, right? AI come out with great answers, great solutions. And so as we use it and as we embed it across an organization and as it starts to permeate so many of the activities that we do, there's a risk that humans become too reliant and trust the AI model too much. And so the concern is that while now it may make sense to only use human in the loop as that intervention to protect ourselves against AI errors, in the future, it may not be enough. And so our point here is that actually companies may need to start looking at second and third line risk defense mechanisms or mitigation mechanisms in addition to that human in the loop, because humans can get too complacent. So we can rely too much on the technology. And I think sometimes we all do rely on the AI too much. And so that's something we've honed in on, we've identified as a risk. And I think going forward, we're going to engage with our investee companies more on understanding what other risk mitigation tools they're implementing, particularly as it gets so complex. Another key one I just wanted to highlight, which I'm sure you might have heard of, is really around shadow AI, where a lot of employees are bringing their own devices. We're calling it BYO AI, where they're using unauthorized AI tools, using it at work, and that could lead to IP leakage, compliance risk, etc. So that was another area we identified that many boards weren't talking about. And so again, I think there's a few areas and gaps here that boards do need to get across, do need to upskill on. And I think this will inevitably happen. And we know boards are getting more and more the kind of the skill set and the ability to question and have that risk oversight. But again, it was just some areas that we identified that do need focus on going forward.
My goodness, 1 minute you said it's too early, and now we need to think about beyond the human guardrail.
Yes.
There's a lot there to unpack, but can we wrap it up with perhaps, if there is one thing that ASX boards could do today after listening to this episode, or the investor who's listening to this episode, about how to better prepare their people and workforce for the impact of AI, what would it be?
That's a great question and a loaded question as well. I think from our perspective, it's not to be fearsome of AI, it's to better understand and really upskill and train and really lead into what AI is doing across your organization. I think from our point of view, it will be our focus from a stewardship and really trying to help our investee companies understand what investors are looking for from a risk perspective, from a disclosure perspective, and what our expectations are from oversight, accountability, kind of workforce strategies. When we finished this article, we actually shared it with a lot of our investee companies as well, because we thought it was important to have that two-way dialogue with our boards and investee companies. And so I think our point of view is that it's not just a technology risk, it's an investment risk. And so understanding how it's being used across your organization and where those guardrails should be, I think is the most important thing from a board's perspective. And then, of course, that capacity and training piece as well.
Well said. Sue Lyn, once again, thank you for joining us on this episode.
Thank you so much for having me.
This is The Greener Way. I'm Michelle Baltazar. Thank you for listening.
The Greener Way podcast is a product of FS Sustainability. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional, legal, or tax advice. Before making any financial decisions, you should read the product disclosure statement, and if necessary, consult a licensed financial professional. For more information, head to the disclaimer page on the FS Sustainability website, fssustainability.com.au.